A short note to our viewers before the masterclass begins. We are sad to inform you that S.R. Rajan, the head of compliance at CoinSwitch Kuber, passed away nearly 2 weeks after the recording of this video. Rajan had more than 27 years of experience in the compliance and anti-money laundering space. He worked with the Indian markets regulator SEBI, many multinational companies like Bank of America and Citibank, and various fintech companies over the course of his career. May his soul rest in peace. The Bitcoin network went live in 2009, but it caught the mainstream attention in 2013 after the emergence of a dark web marketplace called Silk Road. And the currency of choice on that marketplace was Bitcoin. Since then, Bitcoin and the use of cryptocurrency has always been associated with illicit activities. But over the years, we have seen that a lot has changed. And as we speak today, we need to see how true is this opinion. To discuss more on this topic, we have Sundara Rajan, compliance lead at crypto exchange CoinSwitch Kuber, Mrigank Patnaik, co-founder and CEO of Merkle Science, and Ari Redbord, head of legal and government affairs at TRM Labs. Hello, guys. Thanks for being here today.
Hello, thanks so much for having us.
So I would like to start the discussion with Mrigank and Ari, since Merkle Science and TRM are both a blockchain analysis startup. So in your opinion, guys, the use of cryptocurrency is commonly associated with illicit activities. What does your analysis and observation from on-chain data tell you about that trend as we speak? Mrigank, would you like to go first?
Sure. Yeah, absolutely. So I think this is a statistic we've been looking at right from the beginning. Over the years, the total amount of illicit activity as a percentage of Bitcoin transaction volume has actually gone down. And even now, I guess if you count like multiple vendors and their databases, that would still be safely under 1% of total Bitcoin transaction volume. So I think that is probably one trend. One thing that we've seen the last year, especially with the price going up, is that pure adoption, like Bitcoin volumes or transaction volumes have been growing much faster than criminal activity. So this means two things. I mean, it could either mean that criminal activity is decreasing on maybe Bitcoin and Ethereum, moving to privacy protocols or other coins. It could also mean that the database approach, like criminals now are aware of companies like Merkle, TRM, Chainalysis. So just pure play, having a database of good and bad addresses is insufficient. Criminals are becoming smarter. So finding ways to thwart that activity as well.
Yeah.
Happy to jump in there. Yeah, no, I think that's absolutely right. And I think that that's consistent probably across all of these different sort of analytics companies that do what we do. I will say that sort of as the crypto economy grows, you are going to see more illicit activity, just like you would in any other thriving and growing financial system. You know, I sort of say from time to time that if you didn't see illicit activity in crypto, there would be a problem, because bad actors only want to take advantage of growing, thriving economies. That's the nature of fiat as well. But just stepping back for a moment, I think it's from the early days of Bitcoin, the same qualities that make crypto such a powerful force for good in the world, permissionless, decentralized, cross-border value transfer at the speed of the internet, make it attractive to illicit actors who also want to move money right at the speed of the internet. But I think with tools like TRM, like Merkle Science, law enforcement and investigators and compliance, officers at large exchanges also have more visibility into this new financial system than they ever had before. And I think that, we're seeing that play out as we sort of try to understand, what does illicit activity look like as the crypto economy grows?
So while we understand that the data suggests that the use of cryptocurrency or Bitcoin has reduced over the years for illicit activity, but there's also a concern that all these bad actors might have moved to more privacy-centric tokens like Monero or Zcash, for example. Now, I want to touch upon those topics later on, but first I wanted to have some thoughts from Sundara as the compliance head of a crypto exchange. I mean, this is going to be a big headache for you. Compliance is very necessary, and all regulators in the world have this sort of opinion that crypto is only used for illicit activities, right? So over the years, at now as we speak, how are you leveraging the solutions that are provided by chain analysis firms like TRM Labs or Merkle Science, and how are you helping the regulators as well with the help of the insights that you get from such products?
See, if you see from an Indian context, over the last few years, the crypto volume has really gone up like anything. Now, whether people understand what is Bitcoin blockchain, we don't know, but there has been a huge spurt in the volume. Okay, that has thrown up other challenges. That is, as rightly pointed out, any asset class which is tradable, you always run the risk of that asset class being used for illegal purposes. So we are also seeing people try to use this for illegal purposes. Maybe the way they do it in a blockchain or a private technology is different, but what they try to do on the exchange is slightly different. They try to create these fake accounts, they try to hide their identity, and they also try to do a wallet to wallet transfer, to private wallet or a hot wallet or a cold wallet. So what is happening is this has thrown up challenges, especially in Indian context when there is so much of negative noise around crypto, that crypto is being used only for money laundering purposes. I don't know how that image was built up. Yes, every asset class has some bad actors using that for wrong purposes, but people without understanding what's crypto and blockchain, they believe in that theory that crypto is used only for money laundering activities. So with that negative news around crypto, plus the fact that India is yet to regulate the crypto market like a banking or a capital sector, adds more responsibility on the compliance of these exchanges to make sure that voluntarily we adopt certain practices to make sure that our systems are not being misused for that. So that's the challenge, and we do receive requests from various investigative agencies globally, and we help them with whatever information we have. And sometimes we also have issues and we also get information. So or any kind of enforcement authorities in India, whenever they want information, we provide them without any kind of challenges.
Interesting point, Sundara. I quickly wanted to ask a follow-up question on that. You did mention that people usually associate the use of crypto for money laundering, right? And while you do mention whenever you see any anomaly on your exchange, you do report that to the agencies. But there's this notion which you just mentioned earlier. How does an exchange like CoinSwitch counter this notion?
See, as far as we are concerned, we undertake a lot of educational articles and videos around each crypto coin. And wherever possible, we try to explain what is blockchain technology, what is crypto, and what are its use cases. And we just mentioned that if somebody wants to misuse like any other asset class, this also can be misused. It's not that this is only used. So, and the good thing what has happened was government of India has also mentioned that they are looking at how they can leverage the blockchain technology to be used, since that's one of the one technology that's coming up and they don't want to be left behind. That has really added to our cause and explained to the customer, look, blockchain is not something which is negative or which is something which is used only by for illegal activities. So there are these use cases, and we try to educate the customer as much as possible. And we always tell the customer that you please understand what you are trying to get into, and not just get on these rumors that crypto be. And the other thing what has happened in India is they've always associated crypto with a currency. They have coined this term cryptocurrency, though as an industry, we never advocated crypto to be treated as a currency. We wanted it as an asset class, but for some reason, they have started using the word cryptocurrency, and then money laundering all fit in together. But to answer your question, we are on a continuous process of educating our customers through various articles and YouTube videos, and we tell them that it's not bad as what it's being projected out in the world.
I would just add real quickly.
Yeah.
That's why these kinds of conversations are really so important. I think that this perception that there's all this illicit activity in crypto, and you hear this term all the time associated with crypto, is unregulated. The fact of the matter is it's highly regulated. and really the most of the crypto economy is made up of exchanges like CoinSwitch, which you just heard are working very closely with law enforcement, working very closely with regulators, have built in essentially the FATF guidance that requires KYC and having transaction monitoring solutions like TRM and Merkle Science and others in the space. And I think the more you sort of tell that story and you talk about the way exchanges have built out very sophisticated compliance functions like CoinSwitch has, I think you sort of, it's much more of a sense that yes, this is already a regulated industry, and certainly more regulation is coming, but it's just important to have these kinds of conversations.
Yes, I agree with you, because one more thing, what we are doing is, voluntarily we have adopted certain processes which we have taken from the capital market space, which is regulated by SEBI. Like we have implemented a robust KYC process. We are having a good transaction monitoring. We have created scenarios. We are monitoring it. And, that has reduced these kind of illegal activities to a large extent. And, so it's a continuous learning processes, but yes, we have made the beginning, we have made good progress. And, as each and every day goes, we keep learning on whatever is happening, and then we try to strengthen our system. And that's how we keep tab of all these activities and make sure that, they are out of our system.
Interesting points. So, Mrigank, I want your thoughts on this next question. Before we move forward, we need to establish why there was a reduction in the trend in the use of cryptocurrency for illicit activities, right? Early on, it was very commonly known that all cryptocurrencies are very privacy centric, but there was an element of pseudo anonymity associated with them as well, right? And since every entry on the blockchain is immutable, a person cannot just go and then change that. It's like, leaving permanent footprints on a network, right? So can you explain to us a little bit on how did startups like you and TRL Labs leverage that entire open nature of blockchain to actually build these forensic tools?
Sure. Yeah, absolutely. So I think what a lot of companies in our space do is we de-anonymize certain aspects of the blockchain. So we label entities on the blockchain. We send Bitcoin to different exchanges, services, build out clusters, label them. We have similar processes for labeling negative entities as well. So I think ransomware, darknet marketplaces, particularly in Asia and India, I think scams are quite big as well. So crypto scams are always growing and a constant threat. So we label all these entities. Then at Merkle, we go a step beyond that, where after that, we apply a layer of just behavioral analysis, where we look at wallet addresses, try and identify suspicious transaction patterns. All this is packaged into compliance solutions. So exchanges like CoinSwitch would screen their incoming and outgoing transactions and get a risk rating if it comes from a criminal. So even if the criminal has surpassed that KYC process, this is an additional step on top of that. As technology keeps evolving, I think all the companies in our space also keep evolving their solutions to kind of tackle more and more types of illicit activity. So mixers, now DeFi as a category is becoming bigger. So tackling risks related to DeFi and any other criminal activity that comes about. So that answers your first question. With respect to your second question, so the percentage of noted criminal activity of crypto transactions seems to be reducing slightly, but we're not sure whether that means that criminal activity has reduced overall. Like it could just be that criminals are now getting slightly smarter. They are moving to different types of methods. So most criminals just use Bitcoin and would even use crypto exchanges. That's because they aren't sophisticated enough, right? So this is the usability, ease of use of a mixer or a crypto exchange. A crypto exchange is far more usable than anything else. So they just use crypto exchanges for their money laundering or kidnapping scams. But over time, the criminals also get smarter. So now they're making sure that they use unhosted wallets, privacy protocols, and as those become mainstream, you'll see a lot of movement into those. So that could be one reason. Second, now criminals are smarter about tools such as ours as well. So earlier, it was all a new industry, but now they know that if they make direct Bitcoin transactions, they can be traced back they can't send Bitcoin to a coin switch or a Binance, because then like that's the easiest way for them to get caught. So it could be possible that our database detects less criminal activity,
Sure.
but that just shows that more and more needs to be invested into the space by both like companies like crypto exchanges and custodians, but also companies like ours to make sure that we tackle the new types of crime that evolve.
So that has been there always in such disruptive sectors that criminals are always a step ahead, and the compliance teams always need to catch up. That's there. But Ari and Riga, I wanted your thoughts on this bit. As we speak, how certain are you of the illicit activity data? Right. Not every crypto exchange or transaction happens on a centralized exchange like CoinSwitch, which has regulations in place for KYC. Right, we have seen the emergence of decentralized exchanges as well, and there a lot of volume happens on those sort of platforms, right? So what amount of transactions would you say it's hard to classify as we speak whether it's illicit or not? What are we missing out, and how are you guys planning to catch up to that?
No, that's a great question. I'll get to it in a moment. I
Sure.
just kind of wanted to answer one piece of the last question because I thought it was a
Yeah.
really good one and really well answered. I was a federal prosecutor in the U.S. for about 11 years, and what you just described is something that we've seen in every financial system. It's this cat and mouse game between law enforcement and then also sort of companies like TRM and Merkle Science with criminals. Criminals now live in this digital world. And these obfuscation techniques are becoming more and more sophisticated. Privacy coins, peeling chains, chain hopping, these types of techniques. But the tools are also becoming much more sophisticated, like TRM, like Merkle Science, to have capabilities that we've really never had before to visualize financial flows. And I think that is sort of that is something that will always continue, and I think we'll continue to innovate and evolve, as will sort of illicit actors. In terms of your question and sort of like yeah, you have CoinSwitch, you have Binance, you have Coinbase, you have these compliant exchanges, but how much are we actually tracking that is that goes beyond that? And I think that, look, just like in fiat, where you have this sort of landscape of non-compliant money service businesses, hawalas, if you will, you have that in crypto as well. Recently, the U.S. Department of Treasury brought sanctions or designated a cryptocurrency exchange called SUEX, which was what we call at TRM a parasite VASP, meaning it lives on the infrastructure of a larger compliant exchange and using the speed and liquidity of that exchange to do transactions without any compliance controls. And essentially what that did was it facilitated the ransom payments and terrorist financing and other types of illicit activity. That is always going to occur. But I think as sort of large compliant exchanges like CoinSwitch, which does a terrific job of this, builds out their compliance controls, uses tools like TRM, like Merkle Science, I think you're going to see even less of that, or the ability of those types of exchanges to exist. I think you are going to see a real focus, and we're already seeing it, but I think into 2022 and beyond, of regulators and law enforcement on this very specific, what we'll call the illicit underbelly of the much larger illicit crypto economy. And we're going to start to see actions against parasite VASPs more and more. We're going to see darknet mixing services. In other words, services that advertise on the dark net, that they will mix your funds in order to obfuscate financial flows from law enforcement and regulators. You're going to see just a real focus from regulators on this illicit underbelly. And I think that will also continue to have the effect that we've heard today about sort of the overall percentage of crime going down in cryptocurrency.
Interesting point. Regang, would you like to share your thoughts on that question?
Sure, yeah, absolutely. I think one of your questions was centered around how confident companies like ours are about the illicit activity data. So there's different ways we use to tag this data. And so at least when it comes to a database, there's a high degree of certainty that this is an exchange or this is a ransomware address or a darknet marketplace, because we either get it through our different methods of data collection or through a reliable partner, run it through several checks. Now, the bigger challenge is there's still a large segment of wallet addresses that are untagged. And those are definitely, some of those are definitely criminal wallet addresses. So this is becoming more and more of a problem, especially as criminals learn about like the tagging of good and bad addresses. Smarter criminals would make sure they use new wallet addresses, and like Ari mentioned, chain peeling, using mixers, using privacy protocols will all become more prevalent. I think as that happens, you'll see more adoption of everything that's happening in traditional finance, where you start using machine learning based approaches, behavioral approaches, where even if a wallet is an unhosted wallet address, you look at its behavioral patterns to say that it's behaving like ransomware or behaving like a scammer. So flag that out as risky. Exchanges would start using something called biometrics, where they look at IP address more, or how often the device is switching around or changing, and use that to track criminal activity more. So it's a constantly evolving process. Over time, it just gets better and better. And then criminals know with something new. So then tools such as ours would also start coming up with newer ways to counter that.
The only thing I would add to that, I think that's a terrific explanation. Look, in fiat, in order to create a shell company, you need lawyers and you need time. In crypto, you can spin up wallet addresses, at the click of a button, hundreds or thousands, programmatic money laundering at scale, essentially. And that's why, companies like TRM, like Merkle Science, are using sophisticated data science and machine learning, in order to understand typologies, understand behavior of what does money laundering look like on chain, not just, sort of, is this wallet address associated with specific activity, what we call a blacklist. And I think that that's sort of where the space is going, to be sure. But that's why we have to do this, because but that goes back to sort of my last point, and that is, as criminals become more and more sophisticated, so do the tools. And this is sort of the next generation of that you're seeing from these companies.
So I wanted to go back to Sundra for the next question. As an exchange, what are some of the patterns you look at while identifying illicit activities? How do you leverage these tools? So if you can give us some insight from your day-to-day practice and an exchange, and how that can help um, law enforcement agencies as well, that'll be really great.
Yeah, sure. See, what happens is, as we mentioned today in India, crypto does not have a regulation from the government side. This is like a regulated business. We all of all self-regulate. Okay, now what happens is, and recently what we have done is, given the risk of money laundering and the queries from some of the enforcement agencies in India, what we did was we don't allow the client to take cryptos out of our ecosystem.
All right.
So that's one thing, big decision we have taken at the cost of business, because the risk was too much. And, with lack of regulatory clarity around this crypto, and with too much of noise around the negative news about crypto, it was becoming really a big deterrent for us to do business with that risk. So we decided. And apart from that, in India, as of now, what we see is, in the Indian exchanges, what people try to do is open fake accounts. Okay, we're using some fake documents is what we have seen. And that's something which sometimes they use fake documents, and sometimes they use genuine documents of a third party.
All right.
So we have to introduce a lot of AML systems within our organization to make sure that that also gets mapped and tracked. So that's one thing we have seen. And then what typically in a transaction monitoring, what we have seen is could be possible suspicious transaction, like the guy is acting as a friend for somebody, or trying to typically he's acting as a friend for somebody. That's what we have seen. And and some people, they come and try to do transaction just for the sake of getting incentives and all those kind of stuff, because we do have our incentive or referral programs. So some people just come only for that, and try to open fake accounts. So these are some things we have seen. And people try to make third-party payments into our system, which also we have systems to track and restrict them from making those payments. So this is what we have typically seen. And as of now, we are doing only INR related transactions. So we have not yet gone to the blockchain or to the global exchange level, though our clients do buy transactions on some of the international exchanges, but we have not yet. But yes, as we are also planning to launch our own exchange in the near future, we are working on that. And I think once we do that, then tools what Ari and Mrigank were present, this will come into the picture, and to track. And as of now, regulatory agencies, what they ask is for the wallet address and the transaction details, which we provide to both Indian as well as the international regulatory agencies. We receive a lot of such requests from global investigators. We do provide them with all the end-to-end information without any issues.
No. Interesting point, Sundra. I have one follow-up question on that. While over the years, we've seen that Indian exchanges have been sort of proactive to show how this space can be regulated as well. But you mentioned that whenever a request comes from an enforcement agency, then you comply and you give the data. But I don't think, because of the lack of regulations right now, unlike in the conventional banking system where a bank, let's say, would have observed some weird behavior or a weird transaction, right? And they have provisions in place where they can go and report that. They can be proactive as well. So can crypto exchanges be proactive? Is there a provision? Can they just like go? Is there any enforcement agency or any regulator that they can go and then just flag off proactively that, all right, this is some transaction activity that I've observed on my platform. It looks a bit suspicious. What can we do about it?
Right. So a couple of things we do on that space, as you rightly pointed out, typically in a banking or a capital market space, if there is a suspicious transaction, they get reported to the FIU India. And then FIU India does whatever necessary action that has to be taken. But since crypto is yet to be defined by the government as asset, FIU says, you don't come under our purview, so please do not report to us. So FIU is not going to, they have not yet created a reporting mechanism for us. So that leaves us, okay, if I find a suspicious transaction, then what do I do? See, the only thing I do as of now is to flag those accounts or freeze those accounts, and I don't allow them to continue in my system any further. That's one thing we do. But if he's trying to do some sort of financial fraud or something, then we have the option of going and reporting to the economic offenses wing about these details. And in some cases, we do work with our banking partners and flag these transactions to our banking partners. And banking partners, then they analyze it further and then they go and do the reporting. So we adopt one of these processes. We have these three options available before us. But beyond that, there is no formal reporting that has been mandated for us, as rightly pointed out.
Makes sense. Yeah. Mrigank, the next question was around privacy-centric tokens. Why you have mentioned that there are many ways by which bad actors can leverage many things in order to, completely have an anonymous transaction using crypto. But privacy-centric tokens like Monero, Zcash, they have been there for a while now, right? And these are some tokens around which even regulators have specifically raised concerns, right? So as per the current methodology, how do you identify illicit activity using these tokens? Is it applicable to these privacy-centric tokens as we speak, or is it like a work in progress? Mrigank, you can start with the answer. Then Ari, I would like to have your thoughts as well on this.
Sure. So I think each privacy token operates in a slightly different manner. So the answer actually is different for each of those privacy tokens. For something like Zcash, where there's like some transactions that appear on a blockchain and some others that don't, like customers have the choice. The ones that appear on the blockchain, we deal with them the same way that you would deal with, like, say, Bitcoin or Ethereum, where you start looking at the blockchain, looking at transactions, suspicious patterns, and where funds are flowing to. But I think the second type of transaction where not everything appears on the blockchain, or it's unclear which counterparties are involved or which addresses are involved here. So for that, at least traditional blockchain analytics tools wouldn't work as well. So we all need to evolve our methods, trying to analyze potentially the device. So working with exchanges or working with agencies to try and get hold or get an understanding of the device, the IP address. Those are potentially methods that can be used for tracking in that case, right? So in most of these cases, there's a problem of liquidity as well. So
Sure.
they're not as liquid as Bitcoin. So then you look at like the volume of transactions. If there's a large volume, then the way it splits up or the way things are moving, you kind of associate that and then track it down that way. But for smaller transactions that might be critical, you would try and track down a device, because to use any of these currencies, you need a device connected potentially to the internet. So narrowing down on that device and potentially trying to track that down or getting some data from there is probably the way to go there.
All right. So even if somebody is using a privacy-centric token, there is a chance that you may be able to track the IP address of the device from which they have done the transaction. That makes sense. Ari, your thoughts?
Yeah, no, I thought that was a good point. Look, I think that privacy coins are obviously not all created equal, and
Yeah.
there are blockchain analytics tools like TRM, like Merkle Science, have capabilities involving certain coins and not others, just sort of based on the structure of those coins. Ring signatures like Monero are very difficult to trace, but I think that that's when you really sort of do great off-chain investigating, as was suggested, and you work to figure out sort of other ways to do that. I will say, to the liquidity point, which is a really good one as well, I think one thing that we've seen globally with large sort of compliant exchanges is the sort of de-risking of Monero in particular, for example, right? Regulators have continued to talk about concerns around Monero and how Monero itself, or privacy coins like Monero, present a red flag when you're looking at sort of transactions. So what you've seen is a de-risking, which means it's even harder to access than really ever before. If you see sort of this latest round of ransomware attacks, for example, Colonial Pipeline and JBS Foods and some of the larger ransom attacks, a lot of those attackers have asked for Monero and actually have offered a discount to take Monero. Well, the payment was still made in Bitcoin, because it is much harder to for a business to get their hands on Monero from a regulated or from a compliant exchange than it is to have access to Bitcoin. So I think the de-risking and sort of the regulatory landscape itself has also started to potentially solve that problem.
Interesting point, Ari. Now I want to talk a little bit about regulations and how startups like Merkle and TRM are helping regulators. So you guys work with regulators around the world, with exchanges, and in India we are yet to take the first steps towards regulation. Right? There has been a lot of discussion, but we are yet to see some formal regulations in place. So, in your opinion, in your talks with various regulators around the world, what are some of the best practices that you have observed, or what are some of the regulators who engage in a very holistic manner when it comes to regulating this space? So, Ari, would you like to start with that?
Sure. Yeah, no, absolutely. I think for better or worse, sort of everything I think in this space right now starts with the FATF, which is the Financial Action Task Force. It's sort of the UN of money laundering. It's a collective of nations that have come together over the years and dealt with, issues like narcotics trafficking and terrorist financing. And there's really been a lot of focus over the last, few years on cryptocurrency. And what they basically said, and a lot of regulators have begun to adopt this guidance, is that what is expected from a compliant exchange like CoinSwitch, or what they call a VASP, or a virtual asset service provider, is a risk-based compliance program. And that what that means is that risk is different for different businesses, right? But you should kind of understand, what are your risks and how do you mitigate them? So if your risk is ransomware exposure, that should be something considered a high risk and a focus of your compliance program. You should make sure you have tools like TRM, like Merkle Science, that have settings that prioritize those threats, for example. Maybe you're in a region where terrorist financing is a larger threat. Maybe online gambling matters to some exchanges, it doesn't matter to others. So I think that's really important to understand, that everything is risk-based. And then you start to build from there. You have compliance experts, like we're hearing from today. You have policies and procedures, and you have transaction monitoring solutions like TRM and like Merkle Science that help monitor transactions, screen wallets, just mitigate the risk from illicit actors. So it's really, I think, building out that sanctions exposure is another really important piece to the puzzle. You want to make sure that you are not engaging with sanctioned entities, either sanctioned by OFAC in the US or the UN or the EU or some other entity. So I think the tools are there. A lot of the expertise is there. It's sort of really building that out. I think the real challenge, and I'd be curious to hear what other folks on the discussion have to say on this, but I think the real challenge for exchanges is right now, how do you anticipate where regulators are going before the regulations are actually there in order to ensure compliance when they do evolve? Because I think the most important thing right now is that VASPs, or these crypto businesses, build compliance they bake compliance into the business as they grow.
Sure. Mrigank, would you like to go next?
Okay, great. So yeah, I think definitely valid points by Ari. The risk-based approach works very well, publishing a sanctions list. I think one of the best practices for every regulatory agency to follow is to try and reduce regulatory ambiguity. So because it's a brand new space, or a space that's constantly evolving, everything new that comes out comes with a lot of regulatory ambiguity. You just don't know, right? So just clarifying what you should report, who you should report to, and potentially coming up with a licensing regime helps a lot in reducing, I think, illicit activity, but also in fostering just a healthy, legitimate ecosystem for cryptocurrencies within that country, right? So I think in India, a lot of it is just left to speculation. Whereas if the regulator actually came out with guidelines saying that these exchanges all report to SEBI, you need to get a license, you need to follow ABC, or a whole book of potential requirements from a compliance perspective. So that's something what Singapore has done, right? Or a lot of other jurisdictions have now started doing already, where they have a list of approved VASPs. And I think the FATF is also a great example. They come up with a lot of material. So they work with the exchanges, B, providers such as ours, try and get as much data as possible and come up with suggestions. So that whole process is very important for most regulators to kind of adopt right now. It isn't, I don't think ignoring it anymore is possible. It definitely has gone mainstream. So the faster you address it, regulate it, and try and give more and more clarity, the better it is. The second, I guess, best practice, which again, we've seen some regulators do and some not as much, is just working with the industry. So a lot of companies like CoinSwitch or exchanges that are regulated or have an intention to be regulated want regulatory clarity so that they can just build a legitimate business. They know what they should do and what they shouldn't do, right? And it also creates an even playing field. There won't be companies they're competing with that don't do KYC, or everybody has to now follow compliance or has that compliance cost. So working with the industry to constantly communicate what's required, getting feedback from them on what is next or what their doubts are and how you can solve those issues is also another best practice that should be adopted for the growth of the industry.
So, Mrigank, you did mention about Singapore, and it is becoming sort of like a crypto hub in Southeast Asia, right? Can you give us some insight on how does the MAS, the Monetary Authority of Singapore, how do they function? Because every day there is something new that comes up. There will be doubts, there will be questions. So how do they go about with regards to getting clarifications from the industry and then coming up with a solution or a policy framework?
Right, absolutely. So I think the process is pretty standard everywhere else as well. Purely because of the size of Singapore, the execution of that is a lot easier, right? So they first come up with a guideline, they get feedback from the industry on that, and then go ahead and execute it or publish guidance for different entities. In Singapore now, there's clear regulatory regimes, right? So there's over 200 entities are waiting to get licensed, and some of them have been awarded a license where they can operate a crypto business. Some exchanges or some entities have been denied a license as well. And I think that's basically what needs to be done in India as well. It's about time, because when I go about in India, I clearly see a lot of mainstream adoption now. There's a lot of people who now know about cryptocurrencies. I think I saw a guy wearing a Binance t-shirt in a mall once as well. So these instances keep coming up more and more. And the faster you publish guidelines, get feedback from the industry on what best practices are, and come up with a framework, right? So these are the types of activities that are permitted. These are the types of activities that are not permitted. and these are the compliance policies you should follow, or this is the authority you should report to, and all suspicious transactions should be reported to this authority, the safer the ecosystem would become, right? And there would be healthy growth. Whereas this way, you'll see a lot of other smaller companies trying to avoid compliance requirements, avoid compliance practices because they think it's not required anymore, or not required in their jurisdiction at least.
The
Valid
only
points,
other thing,
Yeah,
I was going to say, the only other thing I'd add to that, and I think that's exactly right. I think Singapore has the benefit based on size and sort of and time, really, sort of having gotten out in front of this, is to bring legal clarity to a space that it was in desperate need of it, to be sure. But I would say that I think the one other piece of this is there really does have to be a global aspect to this. And it's just so important that, to the extent possible, sort of, jurisdictions that are engaged in the space are consistent in terms of what are the regulations, because if not, you're going to see a lot of jurisdictional arbitrage and sort of businesses deciding to, do business with one jurisdiction and not another. Look, I think the nature of crypto, the sort of cross-border transfer, at the speed of the internet, really does require some sort of global approach to this. I don't know that you're ever going to get, a full, clear global framework for cryptocurrency, but I think you can see some consistency across regulation, and that's going to be a very important piece of the puzzle.
So global framework for a global technology, that completely makes sense, Ari. Yeah, Sundara, would like to come back to you. So let me ask you this instead of what's your wish list for regulations in India, or what would you like to see, let's say, immediately going forward? Because this is going to be a long work in progress. We won't have a final framework from the get-go. So what could be some of the starting points of regulations, in your opinion?
Yes. So the first thing, the topmost item on my wish list is I want the government to come and quickly clarify whether this is a currency or a commodity or an asset or what is it. Please clarify that first, because what is happening is then it becomes clear to me what are the laws which are applicable to you. Let's say you say it's a currency, I know FEMA is applicable. Let's say you say it's a security, I know the SEBI laws will apply. So that's the first thing I would like to do. And second thing is, identify a regulator. Because why I need a regulator is, as my fellow panelists had pointed out, when an asset class is a regulator, it gives some sort of a confidence to the investors also.
Yeah.
Today, what is happening is the investors, a lot of questions are asked me also. I don't mind investing in crypto coins, but what is the guarantee that my money will be safe? Who is regulating it? These kind of questions are asked. See, today, if I go and tell them the fixed deposit you put in the bank today is not even safe, because if the bank goes bust, what is you get is, it's not protected by any regulator, but still people get comfort that, okay, now RBI is regulating or SEBI is regulating, okay, then my money is safe. They get that kind of a comfort. So I need the asset classification, I need my regulator. And once I have the regulator, then at least have an immediate, quick, basic framework. Okay, we can always discuss with the industry, we can always keep improving it. But when I say basic framework, okay, license, have the minimum criteria, entry norms for the people to operate in the space, give them the license, give them certain basic parameter. Okay, these are some things you have to do, especially from investor protection. And, okay, these are the kind of practices you have to do, like a KYC and a transaction monitoring. You give me this basic framework. I think, to begin with, that would be really a good starting point for us to go. And then, you can always, bring in best practices, keep improving that in consultation with the industry. The good thing about is Government of India has been consulting with the industry. We were formally called by the Standing Committee and Parliament to discuss, to take our views. They have been consulting with various stakeholders. And the other thing, wish list, what I wanted is, as Ari pointed out, this global cooperation is very, very important, because India or any country on a standalone basis really cannot effectively control the illicit activity that's happening here. So you need to have a global framework. Like, for example, the last global coordination we had was on the FATCA and CRS thing, where like every government signed an agreement, and we are now exchanging data with each other. So as some sort of a framework, like a FATCA should, when we can have a global cooperation on FATCA, I'm sure the governments can sit and discuss a global cooperation for crypto also. I think that's very important, because on a standalone basis, we can do only up till a certain level, but beyond that, we need global cooperation. Because as Ari pointed out, now currencies, cryptos move at the speed of the internet from one jurisdiction to another jurisdiction. And this inter-jurisdictional cooperation is very, very important in our view. That would be my wish list.
Great point, Sundra. Can you quickly take a minute and explain a little bit about FATCA, just for the benefit of our readers, what it is about, and what was decided back then?
Okay. So the whole FATCA thing started from the US started it. Now, what it was saying is that their country residents are generating income in other jurisdictions, and they were not disclosing it to the IRS. So what US said is, hey, government, let's come together, let's exchange information. If you have a US national in your jurisdiction doing a transaction, please report it to me.
Sure.
And if you want any information about your country resident from my country, I'll give it. So the agreement with US was the FATCA, and with other countries was called the CRS.
All right.
So this was the agreement. So what India did is it appointed income tax as the nodal agency. So all the registered intermediaries in India, registered by SEBI, RBI, IRD, and all, for all non-Indian clients, they have to provide certain details to the income tax. And then the income tax, shares the information with various countries based on the FATCA agreement which we have entered.
Sure.
So this is more of an information exchange about a transaction of their resident happening in another jurisdiction. So similarly, it's even in crypto, if you have these kind of inter-jurisdictional arrangement, there will be exchange of information between various countries on specific transaction which we can ask. That's about FATCA and CRS.
Sure. Thanks a lot for explaining that. On that note, we are coming near the end of this discussion. We had all our panels had some really great and valid points to make. While we have seen that data suggests that the use of crypto for illicit activity has come down, but there are many challenges that lie ahead as well, as scammers and bad actors are becoming more sophisticated and smarter as we speak, right? With that being said, I would like to have the closing comments from all our panelists. So, Ari, would you like to go first?
Sure. Yeah, no, absolutely. Look, I think that just like any thriving financial system, you're going to see more and more illicit activity, even though it will be a lower percentage overall of the activity. But I think the nature of the blockchain, this open ledger where crypto lives and moves, also allows for more visibility on this financial system than we've ever had before. I think this notion that crypto is anonymous is something that it's so important to have these kinds of conversations around to have folks really understand the nature of cryptocurrency. But I think what this allows for firms like CoinSwitch to really kind of understand sort of and mitigate illicit activity in their ecosystem. It allows regulators, it should allow regulators to regulate in sort of smart, thoughtful ways, in order to sort of really leverage this technology. So, look, it's an exciting time. But I think that, it's really important when we're talking about sort of, all right, these are illicit finance risks. Well, let's talk about the innovative solutions like TRM, like Merkle Science as well to solve those illicit finance risks.
Sundra, your thoughts?
Yeah, sure. So from an Indian perspective, what I would like to say is, look, crypto industry has grown like anything, and it's here to stay. It's not, we are in the cusp of a big breakthrough that's going to happen in the crypto industry and the blockchain technology itself. So at this point of time, stopping its growth by saying crypto is being used for illegal purposes is not the right thing. Like any other asset class, the illicit or the money laundering risk is there in crypto also. So that should not be the reason to really clamp down on this particular sector and ban any kind of activity in crypto like what China did. So the good thing is Government of India is progressively looking at blockchain technology, and crypto is a follower of that. And so I think Government of India should look at crypto positively, use of blockchain positively, and bring in regulation, and not just stop it because of these illicit activities. That is here to stay, and we'll have to find ways and means to control those illicit activities.
Valid point, Sundra. Regulate, don't ban. Makes sense. Yeah, Mrigank, what are your thoughts?
Yeah, absolutely. I think I would just summarize what the panelists said. So, of course, fast-growing industry. It's just natural that there would be criminal activity. You see that in every type of technology that comes about, right? So from quantum computing to nuclear power, there are always bad uses of it. So that's where the onus lies with industry players. So I think like CoinSwitch, so not just meeting compliance obligations, but exceeding compliance obligations, right? Trying to stay a step ahead to predict what could go wrong, and then investing in technology. We adopt a similar approach, right? So companies like Merkle, like TRM, where we're also trying to look in the future, not just solving for problems of today, but trying to understand where criminals will move to in the next 2 to 5 years. So technology is definitely one of the solutions here. And then the other aspect of the solution is a regulatory policy. So at least in the Indian circumstance, they could take a leaf out of the book of like a lot of other jurisdictions. Adopting an iterative approach has become commonplace in regulation, right? So a lot of policy gets bottlenecked because you want it to adhere to everything. You want to take care of all the edge cases. But just starting to regulate a certain segment and saying that we will keep the other segment unambiguous. So we will first regulate maybe crypto exchanges, then we will start a licensing regime, and over time we will address unhosted wallets or DeFi. So that sort of regulation is definitely required now. As all of us agree, like it's definitely gone mainstream now in the rest of the world. Banks are using it, payment processors are using it. So it's about time that there's some regulatory policy in India as well. And adopting a lean approach, so taking a page out of tech startups where you come up with a policy and then evolve it over time and give out guidelines to understand what the industry thinks about it, what the practicality of it is probably the right way to go as well.
In fact, just to add what Mrigant said, even the regulators also should understand that, look, illicit activities are happening, will happen. That's something we cannot stop. But the industry has matured enough now to start putting in controls to handle those illicit activities. It's not that, we don't have a visibility on that. We have visibility, we have tools wherein, okay, we might not be ahead of the criminals at all times, but certainly we will not be too much far behind them in catching up with them. So that comfort the regulator should get, so that if there is an issue, it can always be found out. It's not that difficult.
Right. With that being said, I mean, we all can agree that crypto assets are here to stay. And there's no point in shying away from this new technology. It's best to work along with the various stakeholders, hold public consultations, and regulate this space in a very compliant manner, by which you can safeguard investor interests as well as the interests of the various businesses which are being built on top of it, right? So yeah, those were some great closing remarks as well. With that being said, I would like to bring this discussion to an end, right?
Yeah, thank you very much. Thanks for this opportunity.
Thanks a lot.
Thanks to
it was great talking to all of you. Yeah,
pleasure meeting you all.
Let's stay in touch. Yeah, look forward to more such conversations.
Yeah.
Thanks a lot, Ari.
Absolutely.
Thank you
It was a pleasure
so much
talking
for
to you.
Great meeting everyone as well.
Yeah,
Thank
you.
you.
Great conversation.